Our next guest, though, is very bullish when it comes to LinkedIn's IPO. He's Greycroft Partners. Ian Sigalow invests in technology, ad technology, internet software, and mobile services. He's helped with several startup companies, including Buddy Media, Crowdfusion, and Extreme Reach. Quite a few startups. Ian, great to have you with us.
Thank you. Nice to be here.
So you're bullish, and however, this, we just had him talk about the fact that these multiples just seem too much for a company like LinkedIn. Why is he wrong?
So to begin with, looking at LinkedIn over time, it's really an exceptional company. They're in the recruiting space, and a lot of their revenue comes from job search. And in 2009 and 2010 and even in 2008, they grew through the recession. So you'd assume that a company that has a big backlog of recruiting that's dependent upon hiring wouldn't grow in those markets, and yet it's grown well over 200% every single year. And then there's three businesses that comprise LinkedIn. There's a subscription business, which is like a SaaS company. There's a data business, which is like Dun & Bradstreet.
SaaS, which is
software as a service.
Okay.
That's right. Like SuccessFactors or Salesforce.com. There's a data business, which is like Dun & Bradstreet, selling listings and data. And Dun & Bradstreet is a $4 billion company. And then there's also a media business, which is the most exciting part from the venture standpoint, because that's similar to Facebook and other social media platforms. And that business, the media business in particular, had a great Q1. So when you look at the media business over time, Q1 is often the weakest quarter, and they outperformed in Q1, $28 million in revenue, I believe, in the first quarter. So that bodes well for this year. And they have a unique media model at LinkedIn, too. Their users are very valuable.
Because they're focused mostly on business, or they're focused all on business.
They're focused on business. Not all users are created equal, right? Facebook has a ton of users. However, a lot of those users are outside the U.S. A lot of those users are from relatively low-income countries. LinkedIn has a high propensity and concentration of high-value users, which means that you can create buckets and segments within LinkedIn of CEOs, of VPs of technology, and the ability to target those users over and over across the web is very valuable.
So those three areas that you mentioned on LinkedIn, though, what's going to be the key driver? Is it the media part then?
People disagree about this. I think from the digital media side, which is where we sit, we're very bullish on the media part of the business and their ability to continue to grow the user base, the number of uniques, and the number of impressions and page views. In addition to that, though, the SaaS piece is the recurring piece. It's stable revenue. It's good for a public company because you can predict it year over year. It's reliable growth and profitability. And some giants,
obviously, you've got the Dells and the others that are in that. But for you as a venture capitalist, when you see a company like LinkedIn go public, how does that change or change your view on your own?
So for venture capitalists, love this company. And rightfully so. Reid Hoffman and Lee Hauer, they're all venture capitalists now, and they were founders and early employees of the business. We're all in it looking for the next big thing, right? And when IPOs come back again and they're strong and LinkedIn's performance has been strong, it's an exciting time for our business, too.
But what questions does it raise for you, though?
Questions. Looking at the company, I think that the two things that come to mind, one is, if you look at the iconic businesses that have been built over time, you have Apple, you have Microsoft, the founders are still there all the way through, right? And they've led the company, and these companies are vibrant, and they continue to change over time and morph. And Amazon's a great example. It started off as a book retailer, and now it sells everything under the sun, and they have Amazon Web Services. LinkedIn's unique in that respect because the management team is moved on, and now they have professional managers running the company. So I think from a VC perspective, that's kind of the only thing I can point to in the company that.
But you think about that as for yourself, for your own companies and your own
companies.
startups?
Absolutely. We love entrepreneurs, and we back winning entrepreneurs who we believe can take a company from inception to the next billion-dollar idea.
Okay. Ian, thank you very much. Really appreciate it. Ian Sigalow of Greycroft Partners.